Every global rivalry has a turning point. But what if the biggest financial rivalry of our time is built on a trap China walked into? A trap designed not with armies or weapons, but with the US dollar. Mountain of glowing digital dollar bills stacked high with Chinese flag overlay, cinematic light ray, treasury bonds, corporate debt, mortgage securities, a massive dollar mountain. But here's the mystery. China challenges the dollar, yet depends on the dollar more than anyone else. How does a rising superpower become the biggest customer of the system? To understand that, we must go back when China needed something desperately: growth, stability, a path to global power. Giant glowing dollar network extending from the US to China. In the 1980s, China opened its economy to the world. Factories exploded across the coast. Western corporations poured in: Apple, Nike, Walmart. And how were these global trades settled? In dollars, only dollars. Export conveyor belt feeding glowing blue dollars into vaults. And those dollars had to go somewhere. There was only one place big and safe enough: US Treasuries. China didn't buy treasuries because it trusted America. It bought them because it had no other choice. China and the US created a loop, and it made China dependent. If China stops buying US debt, the yuan rises, and exports collapse. China understood this, America understood this. And slowly, the trap tightened. China tried to diversify: gold, projects, partnerships. But no matter what China tried, its dollar holdings barely changed. Because the world doesn't run on yuan, it runs on dollars. And here's the brutal truth: if China dumps dollars, China loses more than America. The yuan would crash, exports would collapse, investors would flee. China would destabilize itself before hurting the US. That is the paradox of the century. The more China rises, the more it needs the dollar. And the more it depends on the dollar, the harder it becomes to escape. This is the dollar trap, a system China entered to rise, and now struggles to leave. China has spent more than a decade building alternatives to the dollar. But each attempt revealed the same problem: US capital with giant glowing dollar roots beneath it, spreading across the world. The dollar is the global operating system. Even nations hostile to the US are forced to use it. 85% of world trade is invoiced in dollars. Oil, dollar shipping, dollar. Loans, dollar. China asked Saudi Arabia to accept yuan for oil. They hesitated, because everyone down the chain still uses dollars. You can't replace the engine when the whole machine depends on it. Then comes the trust problem. The yuan isn't globally trusted. For a currency to lead the world, it must be open, stable, and predictable. China's system is efficient, but it's not open. And the world needs openness more than efficiency. China must also defend the yuan, and that requires holding dollars. If China pushes the yuan up, exports collapse. If China pushes the yuan down, investors flee. So the yuan must stay stable, and stability requires dollars. Even China's commodity imports depend on dollars. Sellers accept yuan, then convert it right back into dollars. China must hold trillions in dollars just to keep imports flowing. And here's the deeper trap: China's own banking system is dollar-based. Chinese companies borrow dollars, Chinese banks owe dollars, and Chinese exporters earn dollars. If China dumps US debt, its own system breaks first. It's like cutting your parachute hoping your rival falls faster. A stable dollar keeps global demand strong, and China needs that demand. If the dollar collapses, China collapses first. This is the structural trap China can't escape quickly. But China isn't helpless, it's planning long-term exits. It's weakening the dollar gradually, not suddenly. A sudden break would damage China more than America. So China must chip away at the system, one brick at a time. That is the structural trap, built slowly, tightened quietly. The dollar trap is powerful, but no trap lasts forever. China won't escape suddenly, it will escape slowly. Financial transitions never begin with headlines. They begin quietly, behind the curtain. And China is building its escape, not by replacing the dollar, but by creating another lane. That lane includes digital yuan, trade alliances, and new institutions. China doesn't need to destroy the dollar, it just needs the world to use it less. And that shift has already begun. In the next decade, the yuan will become a regional reserve currency. Not global dominance, regional influence. Because China knows the world won't trust one system, it will trust many. This is the future, a multipolar money world. Not one currency ruling the world, but several sharing the stage. And digital money accelerates that transformation. The digital yuan isn't just currency, it's infrastructure. It bypasses SWIFT, banks, and dollar-based systems. China's escape won't be dramatic, it will be algorithmic. And gold will anchor this new system. China is buying gold faster than any nation on earth. Why? Because gold is the only asset outside US control. Gold can't be frozen. Gold doesn't default. Gold needs no permission. It is China's insurance policy for a world after the dollar. But here's the twist. The US dollar is not dying. It's modernizing, evolving into its digital form. No empire survives by staying the same. The dollar won't disappear, it will adapt. And China will adapt too. The trap China fell into is the same trap China will eventually step out of. But the escape will be slow, silent, and strategic. Because the future of power won't be decided by soldiers. It will be decided by the nations who control the next system of money.